TheoTRADE. This is Don Kaufman. Look, attention all traders. TheoTRADE's Black Friday sale. It's here, people. And this is your last chance ever to get our incredible $799 TotalTheo package. For the final time, you can lock in TotalTheo for just $799. Here is exactly what you're going to get. 3 hand-picked trades per week. The TheoTRADE tracker to stay on top of all of your trades, the exclusive coaching archives to level up your skills, full access to all live daily chat rooms with real-time trading and insights, plus unlimited access to the archives and, of course, the classes. All right, let's just look through this for a moment. Some of the classes we've done over time. Look, we've got everything from stock classes to futures to hedging strategies. Kind of scroll down this page over here, options 101, 201, 301, everything from expected move to volatility essentials over here, in out, okay, spreads. It is all in here, people. I mean, you name it, we have an archive on it. And people, this is it. After this, the $799 deal, it's gone for good. Don't miss your opportunity, okay, to buy 1 year of TheoTRADE at $799, or even multiple years, if you so choose, of TotalTheo. Click the link below now and secure your spot before it's too late. The clock, it is ticking, okay? Get in on it. It is the final time here at TheoTRADE. We will offer $799. TheoTRADE.com/BF799. Again, that's TheoTRADE.com/BF799. Act now and transform your trading with TotalTheo. To the charts and trades we go. Welcome, of course, to a holiday edition here of the TheoTRADE Weekend Update. All right, let's get right down to business here. This November 29th, 2024. This is an abbreviated trading session, which breaks down to, they give you 3.5 hours to trade. Although I will say volume, not half bad in the S&Ps. You can see the markets are chugging to the upside right now, up some 33 handles. And look, before I go any further, let's just cut to the chase. Let's go to the SPX right now. The SPX, the mother of all products. Oh, wait for it, wait for it. We're home! For the most part, what do I mean? That's the upper edge of the expected move, of course, in the SPX. Something I mention each and every week here at TheoTRADE. I am emphatic about the SPX and expected moves. And I got to tell you, this is, well, we came out of the gate, traded to the upside. We're hitting the upper edge of the expected move. Chicken's done. Or in this case, possibly a turkey. Hopefully everybody had a nice Thanksgiving. But once again, we are, in fact, trading to the upside, trading right to the upper edge of the expected move, which is right around $65. And we only have, though, 3.5 trading sessions this week. All right, beyond the fact and the obvious that the S&Ps are higher this week, well, what are some of the drivers here behind that? Well, you know, I'm looking at the overall marketplace right now, and obviously, okay, we're at the end of November, okay? The election is over and done with, and I have to tell you, with the election, that feels like it was a really long time ago. That was just this November. So we're having one of the best months that we've had since February of this year. And on a year-to-date basis, the S&Ps are up just about 27% on a year-to-date basis. Now, I'm just bringing the 27% to your attention, okay, because everybody now, okay, in December, you turn around here on Monday, that's it, people. It's December 2nd, right? So you're going to turn around on Monday. They're going to be talking about, to the end of the year, it's the Christmas rally. We're going to get through the Fed. The Fed might cut. They might not cut. No one seems to care about any data. Even PCE data came out this week. No, nobody cared. Nevertheless, now we're going to be talking about the Christmas rally. But I have to ask that question. Did Christmas come early? Not only the gap to the upside, okay, following the election, sold off a little bit, but just this most recent last like 6-7 trading days put some back-to-back, some really strong moves into place here. And why do I even bother calling it into question, right? Just ride that pony to the end. I don't like some of the risk reward that I see on the screen. By the way, that's not supposed to be bearish sentiment that I'm giving you here. Okay. I don't like, okay, when markets start to get parabolic, when markets just rip to the upside. Like, look at stuff like Walmart. And by the way, I'm going to talk about this. I even have like Walmart and, Wells Fargo, but Walmart in particular up 73% on a year-to-date basis. Look, I don't like its risk reward. And what I mean, and again, I want to be very specific with that. Does it mean bear up? Well, in this case, I am in bearish positions in Walmart. Okay, I'm in bearish positions inside of Walmart. But what I mean by I don't like the risk reward, I like to look at things like this and say, like, okay, what is the upside potential versus the possible downside risk? And I think at this point in something like Walmart, okay, which has just was fairly steady to the upside, but this most recent move, okay, following its earnings, I don't care what you think of the earnings. It doesn't make a difference to me. The fundamentals are out the window over here. This thing has gone parabolic. I mean, it's a straight shot literally from 84, okay, up to 92. And people, it's freaking Walmart. Like, I can't stress that enough. This is not the latest, greatest tech stock. So it's hitting upper edges, the expected move, pushing the shares higher. It is what it is. If you're going to get bullish in here, okay, you use spreads. Define your risk. And that is something I want to have resonate with many people in the entire marketplace. Like, I think there could still be some decent upside opportunity in the marketplace. Okay. Try to define that risk if you are actually taking stabs to the upside. And that's not to limit how much you're going to make. Okay. It's to, limit what could be the possibility of some big risk in the near future. There's a lot of traders at this point. Like, look around at some of the hubris in the marketplace. A lot of traders at this point, a lot of investors at this point that are looking at that year to date. And it's 27%. We're only the end of November. And these people are going into the clubhouse thinking it's over. Okay. And it's not. And it's disconcerting to me. Again, some of the hubris in the marketplace, especially about, we're going to talk about crypto here in just a moment as well. And I wanted to kick off this weekend's update with that because at this point, there's like no question. Stuff like NVIDIA over here, okay, saw some sell side activity. It's got a bid back under it. And I get it. It's got a bid back under it. Today, it's like NVIDIA is kind of carrying a significant amount of the marketplace. But this is questionable now into the end of the year. Like, again, and if NVIDIA can't hold it together, it's definitely going to damage the S&Ps to some degree. And the reason I'm bringing up NVIDIA and, painting a picture over here, because you're one stock selling away from sell side activity in the S&Ps. And it's like one of the more fragile situations that I've actually ever come across. Like, I don't think I've ever been in a situation where I ever mentioned, like, hey, by the way, the S&Ps are up 27% year to date. And if NVIDIA goes down, the S&Ps will go down unequivocally. Nothing can save it. I mean, you could actually start, let's buy Microsoft and so forth. It's not going to help. It's literally not going to help. By the way, speaking of Microsoft, it's got a little bit of a bid back under it after a sour start to the day. But again, I want this to be a little bit more forward looking. I'm starting to think of the entire month of December and how, as I said, everybody kind of feels like they're going into the clubhouse happy over here, that the year is over. But to me, that unto itself is a degree and a cause for concern, especially when I look at a chart like an NVIDIA. And again, I'm not much of a market technician. I don't mind saying that, but I look at something like NVIDIA, and when NVIDIA, reeks of heavy sell side activity, got a bid back, come right back off there. And you're one stock away to being in the throes of volatility once again. All right, so let's move past, the idea, and maybe Christmas did come early, and we're going to get some wild and two-sided trade in the month of December. But there's other things that I do think about, and if you want to get some other implications on here, Well, there's a lot coming out of obviously the Trump administration, the incoming administration. One of the things I keep thinking about, when Elon Musk starts mentioning, like trillion and a half dollar cuts to federal spending, how's that going to have an implication to 2025? Like, I don't know how you're going to spin that as bullish, but that's one of the concerns that I have that is looming probably in December, if not in early January. Let's go onward. Okay, onward. The U.S. dollar. The U.S. dollar, after an absolutely stellar move, has reversed to some degree. Okay, and I'm surprised, and I really am. I'm very surprised that the dollar reversal has not had more implications first. Okay, to EEM. All right, the emerging markets. I would have expected, if the dollar reversed at all, that the emerging markets would have exploded back to the upside. Ironically, even today, they have actually started to rip a little bit. Again, the EEM is the emerging markets ETF, heavily Asia influenced, similarly to like FXI, which is the Chinese large caps. Okay, both of which have actually had a little bit of a comeback tour, if you will, today. But the emerging markets now flat on the day, but they had traded down considerably earlier today. Anyway, I happen to have a call ratio back spread in here looking for a more significant move. And that's why I'm kind of looking at the implications of the dollar reversing. So if the dollar reversal, if it does continue, you start to see some sell side activity back to like, 105, that cools off a little bit. Is that also going to have implications beyond the emerging markets and possibly start to hurt the S&Ps as well? Again, there's a few things I'm thinking about on that front. And, it's not even the dollar reversing. It's the dollar reversing and, the bonds are starting to rally back. Okay, so if the bonds are seeing sell side activity, the S&Ps are trading higher, right? Yada, yada, yada. But all of a sudden, now the bonds start to rally. Is that defensive in nature? Okay, is it? Is that defensive in nature? Okay, I'm asking that question because, again, I'm looking at it and literally thinking to myself, well, the bonds have got a bid. They haven't done that. Or is there no relationship? It doesn't matter. We're just going to buy everything and off into the sunset we go, right? We're going to buy S&Ps. We're going to buy bonds. Okay, we're going to buy crypto, which I'm going to talk about here momentarily. And then I also start looking at stuff like skew. For those of you that actually do understand skew, look, I'm not going to go into this wild and complicated, examples of skew, but skew deals with the SPX, an average of about 30-day puts versus calls. And I'm just going to leave skew up on the screen and explain it for a second. What skew is measuring, it's the implied volatility of out-of-the-money puts versus the implied volatility of out-of-the-money calls. And what you're looking at here is one of the highest recorded skews. So what this, and the implication of this, we're actually going to jump right over to the SPX. And I'm going to go ahead and bring up like 30-day options in SPX, and right around 30-day options. Here we go. There's a 31-day option. What this would basically amount to, open up like 100 strikes. And I'm actually going to make one of these implied volatility. So it'll come up to implied volatility. The out of the money puts, are trading for a fairly significant premium, versus the out of the money calls. Out of the money calls are, all the way down here to like 8.5% in terms of implied volatility. Whereas the out of the money puts, when I go all the way out to like a 5 or 6 delta here, are up to about 21%. So that differential basically says traders are buying puts, and to finance those puts, they're selling calls. The implication is it's hedging activity. Again, it's hedging activity. Does that unto itself, when you're looking at something like skew, again, does that designate that, there's risk coming? No, not necessarily. I want to make that clear. This is not necessarily like a bearish connotation, but it doesn't help. It definitely says that trade is hedging, and they are well hedged at this point, to the degree you could say, well, it's record amounts. And that's exactly what the reading actually says. We're up at one of the highest readings in the history of this particular product. And again, you can pull up like a 3-year in here, and it's dots. It's the end of the day trade, but you can see it at 167. There's only 2-3 prints that have happened above that. So I'll push that aside. I'm just pointing out right now that, again, I just don't love some of the risk reward in here, okay? Because maybe Christmas has already come and Christmas kind of came early a little bit and the market is, had that bid to the upside. The dollar reversal has implications. The bonds rallying have implications. Obviously, the skew has some deep implications. You're seeing stocks like Walmart that are up some 73%. I'll talk about that again in a moment. And then what I would term froth in the crypto market. What I'm talking about in the crypto market here is, Bitcoin trading back to 98,000. By the way, I'm actually looking at true crypto prices over here. On thinkorswim, of course you can bring up like Bitcoin futures and so forth. Okay. But over there on Tasty, you can actually pull up Bitcoin itself, which is kind of cool, but still some froth in the entire crypto space. Let's not even I just want to generalize. Let's not get into specifics over here. Let's not even look at technicals, okay? But the crypto space, a lot of froth. And anytime I mention this, the crypto enthusiasts are all over me. I'm going to get 25, 30 emails easily just tonight because I'm not ripping on crypto, okay? I'm looking at crypto and saying when there's froth in there, look, when you have coins called Peanut the Squirrel that, people are making up on a whim that are trading for billion-dollar market caps, if it's fine if you want to ride them to the upside. That's, you go for it, okay? But it's an implication where money's getting fast and loose. And that's the only implication that I want you to see in here is not a call necessarily specifically inside of crypto, but when you are chasing, okay, and starting to see asset prices where people are buying tens of thousands, okay, companies like MicroStrategy, tens of thousands of Bitcoin at $98,000 of an average price. It's pretty wild. I mean, it just is. It's absolutely wild. I get it. They borrowed money. They're going out there buying this thing. I think it was 55,000 plus Bitcoin that they actually bought at an average of like 98,000. Okay, where were you at 70,000 there, big guy? Huh? Okay, nobody wanted it 70,000, nobody wanted it 60,000, but you wanted it 98,000. Okay, that just seems like a sign to me. Now, I am actually producing a couple of positions inside of Wells Fargo, and Wells Fargo, I actually created an in-out spread just simply on the basis of look, okay, we have crested outside the upper edge of the expected move. This first one over here, that is the election. Just let it go. Like the election, okay, that was an anomaly. We smashed through expected. Then we actually have, okay, a week outside the expected move, a week of hitting the upper edge of the expected move. This is now the third week in a row, okay, of upper edge of the expected move and then some, okay, and a huge breach here during the election. I pulled a short position, not because I think this thing is going to tank, but it has to pull back a little bit. The short position is 28 days out. It's an in-out spread, one strike in the money, one strike out of the money. I'm up nominally on that one to begin with, okay, but stock down about 10 cents right now. The other one I actually just shorted into today is none other than Walmart, and I've already made that clear, okay, and no uncertain terms. I actually shorted stock in here because I think this is such a parabolic move, okay, that a large or precipitous move and like a one-day move could actually knock this thing back easily to 89, 90. We'll look for that in the near future. All right. Other than that, looking into next week, okay, the thing I like to look at in the next week, look, I am a purist, okay? The advanced decline line right now, really, really strong, okay? So for argument's sake over next week, let's say that, take this into consideration. We're getting stronger degrees of correlation in here. Great. But when I say I'm a little bit of a purist, I'm less one to go into the calendar for next week, okay? You can jump into the calendar next week, what's coming, all right, JOLTS data and so forth. It's like the marketplace is literally not paying attention to that data. When I say that I'm a bit of a purist, I look at this expected move. You want to know why? Is this crap matters. Okay. As I actually started this video, I said, we're home. I said, we're actually going to come right up to this line. That is a line that I drew on that screen last Friday. Look where we are right now. Spot on, people. Okay. Final thing I want to mention over here is what is the expected move for next week? Because it seems that is all that matters in this marketplace. It is all that matters. We're looking at about a $75 anticipation of movement, which is, you know what? Okay, for a 5-day trading week, it's a little bit light. Okay, it's a little bit light. So next week, again, you got 5 days coming up. All right, you're going to be looking somewhere in the neighborhood of about a $75 expected move. And well, that's important. It's important because again, you just came out of a 3.5 day trading week, we moved 65 bucks. Now we're actually ramped up again for a $75 move. Okay. And look, this is, how many weeks in a row do you have to see us hit the expected move to start to kind of pay attention? Last week, we ended on the upper edge of the expected move. This week, okay, chicken's done. Even if we go a little bit higher from here, people, we are on it. We are absolutely on it. It is well worth mentioning again and again. That expected move has been incredibly, incredibly efficient. Look, I want to thank everybody for tuning in here to TheoTRADE. We are extremely thankful. Take advantage of any of the Black Friday specials that we have here at TheoTRADE. On behalf of everyone here at TheoTRADE, have a wonderful weekend. Bye-bye.